It started with just one stroke of a pen. A quiet decision made behind the scenes, setting off a chain reaction that would shake the global economy to its core. At first, no one outside the room knew what had just been set in motion. But soon, the ripple effect would spread across stock markets, boardrooms, and bank accounts around the world. March 4th, 2025 was supposed to be just another day, until it wasn't. That morning, President Donald Trump unleashed a trade war that would throw the financial world into chaos. Experts had warned of potential disruptions, but no one expected the economic earthquake that followed. Investors held their breath, hoping for a manageable storm. Instead, they were met with a full-blown financial catastrophe. This wasn't political theater. It wasn't a negotiating tactic. It was a direct hit to the heart of the global economy, one that would send shockwaves through every major financial center on the planet. The opening bell rang on Wall Street, but instead of business as usual, an unprecedented disaster unfolded. Within seconds, markets spiraled out of control. Trillions of dollars vanished as stocks plummeted at record speed. And just like that, panic gripped the world. The first domino had fallen, and the chain reaction was impossible to stop. Trump's trade war wasn't just a headline. It was a financial earthquake, shaking the very foundation of the global economy. What started as a political maneuver quickly turned into a full-scale crisis. Markets didn't just dip, they nosedived. Even the most experienced investors, the ones who had seen it all, were left scrambling, blindsided by the sheer speed of the collapse. As Wall Street opened its doors, the damage was already unfolding. Within moments, chaos took over. Stocks weren't sliding, they were crashing. The S&P 500, a key measure of the market's health, suffered an unimaginable drop, shedding billions in value before most traders even had time to react. By midday, the number was staggering. $3.4 trillion gone, vanished into thin air. It was one of the worst market crashes in modern history. For months, investors had ridden the wave of Trump's post-election market surge, celebrating record highs. Now they were glued to their screens, watching helplessly as their fortunes evaporated in real time. The Dow Jones, long seen as a pillar of economic strength, took a gut-wrenching hit, plunging 800 points in a single day. Institutional investors, the ones who prided themselves on playing the long game, were now in full-blown survival mode, selling off stocks at breakneck speed in a desperate attempt to stop the bleeding. And then there was the NASDAQ, once the crown jewel of the tech world. It was no longer a beacon of progress and innovation. It was in freefall, officially entering correction territory after losing 10% of its value from its December peak. But this wasn't just a stock market story. It was a global panic spreading like wildfire beyond Wall Street. The fear was everywhere. The CBOE Volatility Index, the VIX, often called the fear gauge, exploded, hitting levels not seen since December 2024. This wasn't just investors reacting, it was something far worse. They weren't just worried, they were running. The excitement that had once powered an unstoppable stock market boom had vanished overnight. In its place, a deep sinking feeling that things were about to get much worse. But this wasn't just about risky startups or volatile stocks crashing. Even the giants, the companies that had once seemed immune to economic downturns, were getting crushed under the weight of the market's panic. Nvidia, the crown jewel of artificial intelligence, took a brutal hit. Investors, spooked by the growing tensions between the U.S. and China, began questioning whether American tech companies could survive the brewing storm. Google's parent company, Alphabet, was in free fall. The fear of strict government regulations and global trade disputes sent its stocks spiraling, leaving investors scrambling for answers. Amazon, a company that had reshaped the way the world shopped, wasn't spared either. Its vast web of suppliers and partners suddenly looked like a liability as tariffs and trade restrictions threatened to unravel the empire Jeff Bezos had built. And then there was Tesla. Already struggling with supply chain chaos, the electric car maker suffered one of the worst single-day plunges in its history. The stock had lost nearly half its value from its late 2024 peak. For years, Elon Musk had defied the odds, proving doubters wrong time and time again. But on this day, even his most loyal supporters began to retreat, fearing that Tesla's golden age might be coming to an end. Wall Street had once placed its trust in Trump's economic vision. Investors had bet big, believing he would never put the economy, the very thing that secured his second term, at risk. But as the trading day came to a close, that bet had turned into a costly mistake. And for businesses, investors, and everyday Americans, the nightmare was just beginning. March 4th didn't come out of nowhere. For months, warnings had been flying from every direction. Economists, financial analysts, even members of Trump's own team cautioned that a move this drastic could send shockwaves through the economy. But Trump wasn't one to back down. He had made a promise to his supporters, and he was determined to keep it, no matter the cost. And so, on that fateful day in 2025, he signed off on one of the most aggressive trade policies in modern history. The numbers were staggering. A 25% tariff slapped on all imports from Mexico, another 25% on Canadian goods. And for Canadian energy exports, a brand new 10% levy. The message to America's closest allies couldn't have been clearer. No industry was safe. Then came China. The already controversial 10% tariff on Chinese imports, something that had been a sore spot in U.S.-China relations for years, was suddenly doubled to 20%. It was a move that didn't just add fuel to the fire, it threatened to burn the entire house down. But these weren't just numbers on a government spreadsheet. These tariffs had real consequences, ones that would be felt far beyond Washington, Beijing, or Ottawa. For decades, businesses had built supply chains that stretched across borders. American manufacturers relied on affordable raw materials. Small businesses depended on low-cost imports to stay afloat. And for regular people, these tariffs didn't just mean headlines on the news. They meant higher prices on everyday essentials. Trump, of course, had his justification. He claimed the tariffs were about national security, pointing to drug trafficking as a key reason for the crackdown on Mexico and Canada. But was this really about keeping the country safe? Or was it an economic battle disguised as patriotism? One thing was certain. America's trading partners weren't going to sit back and accept this without a fight. And the first to strike back? Canada. If Trump had expected hesitation, he was in for a surprise. Within hours of the announcement, former Canadian Prime Minister Justin Trudeau stepped in front of the cameras, and he wasn't there to negotiate. He was there to hit back. Canada didn't waste a second. Within hours of Trump's tariff announcement, Ottawa hit back with a crushing response, slapping a 25% tariff on $100 billion worth of American goods. An immediate $30 billion in penalties took effect, with another $125 billion lined up and ready to go in just 3 weeks. And these weren't random numbers. Every single tariff was designed to cause maximum damage. The first target, energy. A 25% export tax on electricity flowing to 1.5 million homes in Minnesota, Michigan, and New York. And if the trade war escalated, Canada warned it would pull the plug completely, leaving parts of the U.S. in the dark. Then came nickel. As one of the world's top suppliers, Canada announced it would stop all nickel exports to the U.S., cutting off a crucial material used in military weapons, electronics, and batteries. Without it, American industries face major shortages, grinding production to a halt. Trudeau made Canada's position clear. Trump keeps acting like Canada should be America's 51st state, he said. That is never going to happen. This wasn't just about trade anymore. It was about independence. And Canada wasn't standing alone. From Ontario to Nova Scotia, provincial leaders vowed to escalate retaliation if necessary. But while Canada had already struck back, another country was gearing up for its own counterattack. Mexico, and this one would hurt even more. Mexican officials wasted no time crafting a response, and early reports suggested a devastating move that would hit the U.S. where it mattered most: agriculture and automobiles. Mexico was the single largest buyer of U.S. corn, soybeans, and pork. Now, tariffs on these goods were about to skyrocket, putting American farmers, especially in the Midwest, at risk of financial ruin. But the real economic disaster? It was about to hit the auto industry. Mexico wasn't just reacting, it was taking aim at the backbone of the American auto industry. For decades, U.S. automakers like Ford, GM, and Tesla had built their supply chains around Mexico's massive manufacturing network. Factories in Mexico assembled key parts, shipped essential components, and kept production lines moving smoothly. But now, that entire system was under threat. If Mexico raised tariffs on American-made auto parts or disrupted the supply of crucial materials, U.S. car manufacturers would be left scrambling. The cost of vehicles would skyrocket, production would stall, and thousands of jobs could be at risk. And while Mexico was tightening the screws on the auto industry, another giant was preparing to strike: China. For years, Beijing had been on the receiving end of U.S. trade policies. But now, Trump's decision to double tariffs on Chinese goods to 20% had pushed China past the point of patience. This time, they weren't playing defense. They were going to hit back where it hurt the most: technology and manufacturing. Chinese officials hinted at crippling new tariffs on American semiconductors, a move that would send shockwaves through tech giants like Intel and AMD. Losing access to China's massive market could mean billions in lost revenue. But the real nightmare was something far bigger. China had the ultimate leverage: rare earth minerals. These minerals weren't just valuable, they were essential. Used in everything from smartphones to fighter jets, they powered America's most advanced industries. And China controlled more than 80% of the world's supply. If Beijing decided to cut off rare earth exports, the US wouldn't just be dealing with higher prices. It would be facing a full-blown crisis, one that could grind entire industries to a halt. The message from Mexico and China was crystal clear. This wasn't just about trade anymore, it was economic warfare. And for the first time, it was America that found itself on the defensive. The first day of Trump's trade war had already erased trillions in market value, shattered relationships with key allies, and sent industries into chaos. But this wasn't a short-term panic. The fallout from these policies wasn't just an inconvenience. It was the beginning of something far bigger. And American companies knew it. Behind the scenes, major corporations were already making moves. Automakers braced for billion-dollar losses. Tech giants warned investors about a brutal slowdown. Home builders, dependent on Canadian lumber, prepared for skyrocketing material costs, knowing it would only make housing even more expensive for everyday Americans. But beyond the financial meltdown, something even bigger was happening. The global balance of power was shifting. For decades, the United States had been the center of world trade, the hub through which everything flowed. But now, it was pushing itself into isolation. Canada wasn't waiting around, it was already forging stronger trade ties with Europe and Asia. Mexico, once deeply dependent on US imports, was working to replace them with suppliers from South America. And China. It was moving full speed ahead with its Belt and Road Initiative, locking in economic partnerships across Africa and the Middle East. The world wasn't just adjusting, it was moving on. Yet, inside the White House, quiet discussions hinted that Trump might be considering a way out. Was this a real attempt to calm tensions with Canada and Mexico? Or just another strategic move to keep investors from panicking even further? One thing was certain: this wasn't just a bump in the road. The global economic order had changed. For years, countries had cautiously explored alternatives to the US dollar. But now, that cautious approach had turned into a full-scale pivot. Nations were actively cutting economic ties, forming new alliances, and speeding up efforts to move away from reliance on the US financial system. De-dollarization wasn't just a theory anymore, it was happening in real time. The real question wasn't whether the world would move on from the US economy, it was how fast it would happen.